Sure. I mean, on April 24th, we put out a tweet under my handle at Daniel T. Niles, and we talked about in that tweet that we've never seen the semiconductor sector, and I've been on Wall Street for 29 years, hitting new all-time record highs. It was actually up 36% year-to-date through April 24th, while you're actually in the middle of a down cycle. And so to us, it made absolutely zero sense whatsoever. Since then, obviously, the market's come down. So the S&P since April 24th is down about 3.5%. NASDAQ's down about 6%. And the semiconductor index is actually down about 17%. And now people are finally starting to take into account some of those risks. And more importantly, people are really starting to, I think, maybe get a little too negative on things like how Huawei will get sorted out. And so that's why we covered our last short yesterday in the semiconductor space. And as I said in the tweet I put out yesterday, we reached for a falling knife and have started to, buy selectively. We only have, 2 semiconductor longs right now. So that's kind of the thesis.
So Dan, you still think there could be a couple of negative down quarters for this sector? It's just that the share price move had been overdone.
Yeah, and I think more importantly, like the psychology around some of this has been really overdone. I mean, the knife that we started to catch was Qualcomm, in fact, and so with Qualcomm, we luckily had sold our entire position before on May 20th, before this FTC ruling came out, because we were a little nervous on it. We saw it. We weren't surprised by the ruling, but we were really surprised by how the stock reacted. That stock's actually down 24% since April 24th. And there's been a lot of positives that have come out, in my mind, over the course of the last month. And so for us, we believe in selling high and buying low. And for me, looking at Qualcomm in particular, the future looks incredibly bright as we move to 5G next year. Apple, which is way smarter than any of us in this room, they decided, despite their hatred of Qualcomm and the lawsuits they had, that they had to sign an agreement with them and dropped Intel. And Intel promptly got out of the business because they couldn't compete. So you look at that, and you look at Qualcomm down 24%, and you go, well, that doesn't make sense, but that's sort of a microcosm of, I think, what you're seeing going on. So you're absolutely correct. I think we've got a few more quarters of down. But in the short term, at least, I do think that this stuff will bounce as, some of this China situation starts to get sorted out.
Wonder if you put Apple in that category, Dan. It is the worst performing Dow component of the week, lost 5%. So over a month, it's now down 13.5%. You've been short the name before. Where are you now, and what do you do on the trade war fears?
Yeah, no, I'm still short Apple. Apple's not in that category at all, because you're talking two different setups. So if you look at 5G, the reason Apple felt like they had to settle is they had no roadmap to 5G with Intel. So they're a year behind their primary competitors in 5G. So that's the first problem. Second problem is if you look at the estimates for the rest of this year that Wall Street has for the June quarter, September, December, they're all running above what is normal seasonally. So you go, okay, the estimates are also hard to get to. And their phones are at the high end of the market in the sense that they're selling phones, close to $800, above $750. The Chinese vendors are selling phones in that $200 to $300 range. And so they're not in a good spot there. And then finally, they do have about 17, 18% exposure to China.